Oakland home prices dipped this week to levels below where they were in 2022 in what is honestly a pretty shocking price reprieve. But how much of a window do Oakland homebuyers have before prices surge up again? That's the question we're answering in today's Oakland Real Estate Update for March 20th, 2025. Let's get right into the data. And we're looking at the latest weekly print from Redfin for the Oakland metro area. Each line that you're looking at represents a year. This year, 2025, is the green line. Right now, we're looking at the median sale price of a home in Oakland, which actually fell $4,000 this week to $933,000, representing a year-over-year growth of 0%. Pricing is completely in line with last year, and you can see we have dipped just below where pricing was this time in 2022. It is very unusual to see this. One, it's unusual that pricing drops at all this time of year. It's very unusual that pricing has reflected a 0% gain over the previous year, especially this time of year. And it's really surprising that pricing has actually fallen below, not last year, not the year before that, but the year before that, 2022. What is going on in Oakland? Now we're looking at new listing median price. This is the median price at which new homes were listed on the Oakland market this week. And this metric actually fell $5,000 over the last week to $921,000. Now that's $12,000 below the median sale price. And that number is important. That is a measurement of demand. Demand in Oakland is high right now, such that homes are selling for, on median, $12,000 more than they're being listed for. And this may seem like a fine point, but that $12K is significant. This is exactly why you can't blindly agree to pay your agent 3% or even 2.5% when you're trying to buy a home in Oakland, even when your agent tells you not to worry because the seller's going to pay the commission. Let me show you why. So you're a home buyer in Oakland. That's you, and you're working with an agent who charges the typical 2.5%, and you found a median home seller selling a median Oakland home, and we'll, to make the numbers easier, round that price point down to $900,000. So as your agent has explained to you, you offer the seller $900,000, and the seller pays the agent's commission, which at this price point is $22,500. Well, this little roundabout here is the bullshit logic that agents use to make it seem like you're not paying their commission when you actually are. Let me demonstrate. If you were to pay your agent's commission yourself on this median $900K home, it would look like this. There's you, the buyer. Here's your agent with his 2.5% fee. Here's our median home seller. And in this scenario, you'd only be able to offer the seller $877,500 because you'd have to pay your agent directly his $22,500 commission. Well, guess what? Whether the money weaves through the seller's hands or not, in both cases, you're giving your agent $22,500 because in both cases, the seller's proceeds are $877,500. These scenarios are identical to the seller. When your agent tells you that the seller is paying his commission, it means you're offering that much less money to the seller. It's true. I'll show you. Let me just clean this up. Let's say you have a home buyer in Oakland who connects with an agent who only charges 1%. Again, we have our median seller of our median home. In this scenario, our buyer offers our seller that $900,000 median home price, and the seller only has to pay the buyer's agent $9,000, 1%. In this scenario, the offer that the buyer is really making to the seller is for $891,000. Pretty good. Now, you tell me, which offer is going to be accepted? The one made by the buyer with the 2.5% agent or the one made by the buyer with the 1% agent? I can tell you every time, this guy's going to win. Telling you that the seller pays his commission is just part of the California Realtor scam that has been swindling hundreds of millions of dollars from California home buyers every year. I've exposed the full scam. The video's right up there. Check it out. I'm also going to put the link in the description. If you're planning to buy a home in Oakland this year, I strongly suggest you watch this cautionary video so you know where your money is going. Now let's get back to the data. Now looking at new listings, this is the number of new listings that come to market each week in Oakland. This week we saw 629 new listings, which represents a 25.2% growth over the same week last year. Now, this line is pointed upward, and that's nice, and all these numbers look good, but we have to keep in mind this is actually slightly fewer new listings relative to last year than we've been seeing. For the past 6 or so weeks, we've been 30-something% above last year's numbers. Last week we dipped to 28%. This week we've dipped to 25%. So while it's great that we're seeing more inventory coming to market than last year, we also have to realize that our advantage over last year is beginning to shrink. That indicates that this window of low pricing that we're seeing is limited. At some point, pricing will come back. The most important drivers of pricing are supply and demand. The source of supply is what we're looking at right here, new listings. And if new listings begins to dwindle relative to last year, it means less supply. It means upward pressure on pricing. At the same time, homes sold is beginning to break away from last year. Now, homes sold is the most significant means by which homes exit the market. And right now, this past week, we sold 351 homes in Oakland. That represents 7.4% more homes than the same week last year. And if we look at the year-over-year percentage, we can see it's been ticking up the last couple weeks. So last week, we were only ahead of last year by 1.6%. The week before that, 0%. So what happens if our new listings numbers continue to dwindle relative to last year and the homes sold numbers grow compared to last year? Well, that's going to mean less inventory on the market. That's going to mean fewer options for Oakland homebuyers. That's going to mean upward pressure on pricing. So again, an indication that this pocket of low pricing that we're seeing right now is limited. We might only have this pocket for a few weeks before the trend reverses and prices start to surge. Pending sales reinforces that fear. So pending sales is a leading indicator for homes sold because a home goes pending, meaning it enters contract, about a month before it becomes a home sold, which means the contract completes and the transaction completes and the home becomes a home sold. And as you can see, we had this sharp uptick in homes going pending a number of weeks ago. So we should be seeing this uptick hitting homes sold now. And in fact, we are. In the last 3 weeks, homes sold went from 0% year-over-year growth to 7.4% year-over-year growth. This week, 465 homes went pending. That's up 26.7% from the previous year. But the week before that, we were up over last year by 37.6%, 48%, 51.1%. These are some big numbers, and we're going to be seeing the effects of this sharp incline in our homes sold metric over the next few weeks. So indeed, we are going to be seeing less inventory on the Oakland market in the month to 2 months ahead. Fortunately, though, we're way out ahead of last year currently in terms of active listings. This week, we saw 3,581 active listings on the Oakland market. That represents almost 44% more active listings than the same week last year. And this number, as you can see, has had a wide margin over last year for basically the whole year. I mean, last week we were 45% over last year. The week before that, 44.6. The week before that, 41.96, practically 42%. So we're in a good position at the moment. I think we will be losing listings in the 1 and 2 months ahead. It's great that we're 40% ahead of last year's numbers to be entering this kind of tightening phase. So what we should see is active listings to shrink relative to last year. And as this gap gets smaller, that's going to put more upward pressure on pricing, and we're going to see prices rebound from this wonderful little gully that we're in at the moment. And we are already seeing the effects of the shrinking inventory when we look at our weeks of supply metric. This metric is my favorite. It balances supply against demand, so you can really measure year to year in an apples to apples way. This week we had 10.7 weeks of supply on the Oakland market. That represents 3 more weeks of supply than the same week last year. That's pretty good, having 3 more weeks of supply than the previous year. Now, you'll notice that supply measured in weeks is falling off, but supply falls off every year this time of year. So to really see how we're doing compared to last year, we have to look at the successive year-over-year numbers. So a couple weeks ago, at peak supply, we were ahead of last year by 3.9 weeks, then 4.3 weeks. So I guess relative to last year, this was really the peak. But look, then we dropped to 3.8, dropped to 3.5, and now we're at 3.0. So our supply advantage relative to last year is already shrinking. And that's how we use data to inform our home buying decisions. What we're seeing in the data very clearly is that we're in a bit of a pricing lull that will end in the next couple of weeks as inventory gets crunched. Check out my playlist, How to Buy a Home in California, for more helpful tips like this, and I'll see you in 2 weeks for my next Oakland Real Estate Update.